Okay, hello everyone. Sorry for such a delay. There is a real problem. I don't know why, but I can't begin the stream what was planned before. So anyway, this will be in the most part, I suppose, when you're viewing it, it will be some kind of videotape. But anyway, today we'll talk about the moving average, and that is the main idea of trading indicator, the most popular, the most, I would say, the best, one of the best and the oldest trading indicators in the stock market, in forex market, in option market, whatever. So why is it so good? Why is it so used? And what are the main ideas of using it? So how does it work? And how should we use it in our, just trading practice, I would say? Well, because the reason I can't show you my screen is that a technical problem with the beginning stream with the coder, not YouTube coder. I don't know what the problem. I'm not a technician. So anyway, I'll try to draw you something, some principles of how does the moving average works. I will try to show you how the most popular indicator is arranged, how does it count, why should we and why should it be used for trading, and by the end, how should we use it in entering deals. Classic signals for entering deal, different types of moving average, and advantages, disadvantages, everything of this thing we'll be talking about. So anyway, first of all, what is the moving average? We have a lot of price movement on any trading platform. So I would say that moving average is just some kind of regular and self-moving resistance and support lines. So it shows us where the support level and resistance level of the price by this movement, this average movement, this average moment. So looking at the chart, we always often see the price maybe surging up or plummet moments later before surging down. Now up again, increasing potential for false signals by some kind of indicators or some not a breakdowns, false breakdowns, pin-ups, and so on, everything of that thing that makes us makes us to lose money in the false deals, false signal deals. So by the end, I will watch the chart and I will answer all your questions. I'll try to. Anyway, first of all, I'll try to show you the principles of price movement and the principles of I'll try to make it this way. So on the board, I will try to show you the board maybe a little bit closer. I think that will be fine. Okay, what do we have? Wait a sec. Okay, what do we have here? First of all, we have a chart. And the problem of the chart I will well draw it like just a movement. We'll have some kind of moving like this, and the chart is going forward. So we have downs, minimums, maximums, and all they are moving really fast, and we don't know in this point where to go, because next moment this chart may go, oh well, take this point, let's take this point. At this point the chart may go down as fast as it goes up, like here, yeah, what we have, to the next maximum, considering the one before. So, but in the average moment, in the average deal, because we have some timing, we have some time frame, we have some expiration time. Sorry, again, technical issue. Wait a sec. So it's much better, and I hope you will see the board better. Okay. Okay, so in this point, we don't know what will happen with the most variability. What is the probability of moving up or down? What expiration time should we take to make a deal with the most probability to get it profitable? That is the question here. And yes, we sure know that here, for example, we have support lines. Here we have support line. Here we have support line. And here we have a resistance line. Anyway, but in this point, we don't know where to go. And the problem is to understand where the price is intending to move. What is the main idea? What is the main direction of its movement? And what is the main trend? And the moving average at the some kind of indicator, it has some disadvantages, but the most popular, the most profitable, it becomes only because of one thing. This is the main trend indicator. It shows us what is the trend here, what is the trend in this point. If we don't even know where the probabilities, if we don't count the probabilities, if we don't know volumes, for example, whatever. But the moving average helps us to understand where is this point upper or lower, the average price. Because here, for example, in the screen, we have some prices, yeah, 111, 112, 110, and so on. And this point here, is it lower than the average price or upper, higher? And how will it move? And that shows us the moving average, because what does it do? It shows us the average movement of the price here. Well, in this point, like something like that. It shows us where is the average price for some period of time. And that is the period, what is called the period of moving average. how should we count it? Just for understand, you know, there is no need for you to really count any digits because it is done automatically. Well, in the even in the end of the 20th century, some people really had drawn some kind of chart movement with candles by hand, and well, for example, here we have next, here next. For any time frame, for example, yeah, here we have like a hammer, something like that, and the next going down. Here, here, and so on. Well, whatever. I will draw it because it's better for counting, to explain you how is the moving average counted. So what do we have here? We don't understand what is the trend here, for example. We don't know. And well, let's try to make it like that. How many candles we want the period? For how much time should we know the movement, and is there any trend, price trend for what time, for what period do we want to know? For example, let's take 10 period 10. Let's take 10 candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So here is the border of the beginning of the counting of the moving average. And so before this candle, we won't have any points. We won't have any digits because the first point of moving average will be counted and will be is drawn here. We count the price. It is taken. These are taken the prices. Mostly, these are the prices, closing prices of the each candle. It depends on time frame. If this candle is 1 day, so the closing time of the closing price of the day. If it's 1 minute, so it's closing price of the minute. Mostly in moving average, we count by the period. We count by the ending closing price, ending of time period. Sometimes it may be high-low. The average between high-low is maybe opening prices. It may be well, only highs or only lows. What we take in counting depends on the type of moving average, but I will talk about it later a little bit. So what do we have? Here is the price, close price. Here is one. Here. Each of these has the real digit. For example, 12. Here is 1, 11, 1, 10, and so on, with the thousands or even. So we have 10 digits, and they are calculated. We have the sum. They are 1 plus 1. 10 digits. 10 digits here. 10 digits that are considered as the close price of each candle, of each of these 10 candles. Here will be the close price. Here will be the close price. Here one, here, and here. And we have 1, 2, 3, 4, 5. Well, here is 6, 7, 8, 9, 10. 10 prices. They are amount of 10 prices, and they are divided by the period. They are divided by 10. And we have the 1 point, 1 digit, 1 price digit that is, well, pointed here. For example, it will be about right about here. That's the average. The average of 10 digits. The average of the amount of 10 digits. Then this period of time, for example, this is 1 minute, yeah, time frame. This minute ends, and another one begins. We are watching the next price, next candle is forming. And what do we have? Our period is still 10. It doesn't change. We have 11 candles from this one. And how should we count the next point? And the next point will be counted like we are dismount this one candle, this candle, the first one, and we're plussing this one. It has the closing price here, for example, 109, 07, for example, yeah. This one first ending price is minus, and this one ending price is plus, and we still divide it by 10, and we get another point, and so on. Then we have another one candle, another one price, minus, plus this one, and minus this one. We have another 1 point, and here is the moving average we can see. And this moving average in this example is upper than the closing price of the permanent of this particular candle. It's high. The price now here 105, for example. The price now is lower, and the whole trend is down one. We are moving down, and this will show us the next candles and the next price movement, for example, and the next one, and we have the line over the prices, over the candles, like a moving average price for the last 10, like moving, yeah, for the last 10 periods of time, for the last 10 candles. That means the period of 10, 20, 30, 15, 11, whatever. And now we can see that the trend is downtrend. Even if the situation is a little bit differs. For example, like here we have, and we don't understand, yeah? We have this one, then have some kind of this one candle, this one candle, this one candle, this one, oh no, it will be the green one. This will be still red one. Here, a little bit here, and here. We don't know. We can see only flat, some kind of flat, and we don't understand if there any trend or not. Having moving average on the chart, we will see such a kind of picture. And the particular moment we will see, well, it will be like this. We will see that the most part of candles are lower than the moving average. And here is kind of a flat I have drawn. But, well, mostly you should understand that when the moving average is upper, when the average price of all the period is upper than the price now, we can see that here is the more probability to move down. This is the downtrend, and we can see that this is the downtrend. And this is dynamic. I would call the moving average some kind of dynamic resistance line here and dynamic support line here. Well, you should understand that we are for this point, for example, if it's period 10, for this point, we have counted 10 candles. We have counted that. Anyway, this was the first point, for example, yeah? And so by the opening of the market in the morning of Monday morning or even morning night, we have no price during the on Euro USD, for example, no price during the well, weekend. Then we have 10 candles first, and only then on the 11th candle we will see the first point of moving average, then the second one, the second. So in the morning, Monday morning, you won't see any kind of moving average if you won't put its period like 1, but it's no use. So that is the principle of the moving averages. So this is the principle of of counting. How does it work and why it is the average, and why are the average prices are so so seriously need for us? Why do we watch at them? Why do we watch at moving average? Because the average is the most part of the market mob opinion, and we as a trader should be and understand that price lag that we can get from this mob, from the market mob, and we should understand this lag and moving average can show us, is it good, big or not? Are we close to the average prices now exactly or not? If we are too far up or down, then there is the possibility that the price will reverse and go to the moving average, like the support or resistance line. The main idea of the moving average and the prices of the price chart anyway, the main idea is that any price movement will return to its average digits. So we have average level of the day. By the end of the day or in the beginning of the next day, the price will go back to this average level, plus or minus. If we take the some kind of period of time, 50 candles, 100 candles, 15 candles, whatever, we have the period, and we should understand that, like I have shown you. We have this period, and we should understand where is the average price of this period. And we should understand that during the next period, quite a high probability, the same period, that the price will go back to its average significant. And if not, we have a trend. We have the quite a good motion, good momentum of the price, and it moves up or down, and will move a little bit more than this time period that we have for the moving average, for example. This is why we should use this indicator. And I have drawn you the kind of simple moving average. And in trading, we have not only simple, we have quite a dozen, I suppose, of different moving averages, weighted. The most popular of them are simple, weighted, and exponential. So the weight is the difference between them is that, for example, simple one shows us the average without any difference for the beginning of the period prices, or the now forming candles. And the exponential, for example, they are counted a little bit different, and they show us show us the average points of the price, paying more attention for the prices of the last 2, 3, or 5 candles. That is why when you put on your chart simple and kind of an exponential or moving average, you will see the difference with the same period, because they are counted a little bit different, and the weight of the last prices in Hull or in exponential or double or triple exponential moving average is much more. The last price, last candles are much more valuable in the mathematics and the counting of in the formula of this exponential, and how, for example, moving averages, they are more valuable. They are considered more valuable, and show us a little bit different things. That is why the price crosses the exponential moving average a little bit earlier than the simple, for example, or the Hull a little bit earlier than exponential, and much more earlier than the simple one. Okay, now 2 minutes for reading the comments and questions, if I will watch the chart, and after that we will proceed with the explanation of advantages and disadvantages. There are quite two of them, one advantage, one disadvantage, the most valuable for moving averages, and kind of explanation of the most popular and classical signals for trading. Okay. My $900 killed Binomo. That's I suppose that's really a fairy tale. So can you pick up the camera? Oh, sorry, I haven't seen that. Same problem for me also. How to trade? We are talking about that. Use moving average and pair. Okay, nice. So far I don't have any luck. It's not about luck, it's about knowledge and practice and, well, patience. Just, well, take your time, don't rush, take some time for practicing in demo account or in real account with $1 deals, not waiting for much, profit, but making well, some kind of a habit of trading and some kind of experience in trading. So, well, take your time, don't rush. Did you get any profit from? Yes, sure, but it's, I suppose it's not question to me. I suppose the question for the colleagues in the chart. Okay. There's no, well, significant questions here in the chat till this moment. Anyway, let's proceed. So, advantages and disadvantages. The main idea of the moving average, like an indicator, and the main disadvantage of it, that moving average has the time lag, a little bit time lag, and this indicator doesn't show us and can't show us future, because it is based on the prices, on the past prices, on the prices and candles and everything what has already happened. That is why we cannot well, watch the signals and use the signals of moving average like the pre-signals. So the, like a profit, some kind of well, back to the future signals. We don't get the future. Well, we don't see the future with this indicator. We're just trying to understand where we are. The main questions for any trader when he opens or she opens the notebook or laptop or mobile, the main question is, where am I? Where am I now? In the trend, in the flat. If in the trend, then what trend is it? Uptrend or downtrend? What is the main idea of price moving now? Because I'm trying to trade now and I'm trying to find the point of the most possibilities, of the most profit, of the most, well, possible profit, I would say. Well, and that is the main idea, and that is where the moving average can help us. Not with some kind of prophecy, not some kind of running running in front of the train signals, but where we are now, or even where have we been well, 1 minute during the for example, if we are looking at the 1 minute chart, so we are watching and we have signals that are a little bit lagged for several seconds. That is why opening the any positions, any deals, you should open them not during the candle still moving, but in the beginning, in the end of the one candle and beginning of the another one. That is the main idea, that we cannot watch in the future with the help of moving average, but we can understand where we are. And understanding where we are helps us to make a decision where to go, where is the possibility to earn money in the moving up or moving down, and what is the expiration time, well, optimal expiration time for the deal right now. So the main disadvantage of moving average is the time lag and the different exponential, how weighted, well, and a dozen of different other different moving average appeared only because of different traders, different mathematics, well, different experts were trying to make some kind of counting of this method, counting method of the moving average without lag or minimizing this lag. And that is why they appeared, and that is why in most part of trading strategies with moving average, we use not only one, but 2 or 3 moving averages, because with different period, because they help us to understand the scale of well, the daily, for example, moving, and daily moving average on the 1 minute will be with the period some kind of 200 or even more. It will show us the main picture during the day. For example, then the 1 hour moving average with the period about 50. It will help us to understand where are we now during this hour, what is happening and what was happening during this hour. And for example, with the period of well, I don't know, 10 or 8 or 13, it's like a minutes, what was happening during this 13 minutes or 10 minutes. And that is the horizon of our expiration deals with expiration time deals. So if we have the fast moving average about 10 and the middle moving average or slow moving average around, well, I don't know, 25 or 30, then we have to understand that our expiration time of our deals will be between 10 and about 30 or 20 or 30, 25 minutes. If we have a little bit faster or lower time period, for example, we have the time frame about 15 seconds, and we have the same periods, for example, 10 and 30. 30 candles we have, as you have seen. 30 candles on 15 seconds time frame. It's about 4 in a minute, so 7 minutes. It's about 7 minutes, and the 10, it's about 2 minutes. So our expiration time with these periods of moving averages, any moving average, exponential and simple, or both exponential, both simple, or whatever, mixed, we have to understand that our expiration time should be between 2 minutes and 10 minutes. So, and we decide what will the price, how will the price move during this period. That will our moving average will this will our moving average show us with this time frame and these periods, two periods or 3 periods, even if one is more than 30. Anyway, so the time lag is a disadvantage. And what are the advantages? The most significant advantage is that we should not draw something like that. We should not draw some levels, price levels. We just click on moving average, and we have the dynamic support and resistance level. And I consider it the most comfortable option in the in any trading. It will help well with time and with well, infographic, some kind of infographic like a candlestick chart is better than bars or mountain or line chart because it's more significant, it's just more visible. The same thing with the moving average. So these are advantages and disadvantages. And what do we have? We have for the by the end? By the end, we have the idea of the main signals. So main signals. I will try to show it a little bit better. I have drawn quite a lot of things here. I'll try to explain now the main signals. If we have only one moving average, as here we have the green one. Yeah, let's imagine that that was something like that, and here. So all the laws of moving, all the signals are the same as the price levels, support and resistance, horizontal, historical, psychological, whatever. What do we have? We have some kind of breakthrough. We have some kind of the breakdown and breakthrough. So when the price is upper than the much upper than the moving average line, here, for example, yeah, we have the uptrend, and we should understand that because the more distance from the moving average, candles from moving average, the more intensive and the more significant is the uptrend. When the price goes closer to the moving average, the price goes closer. So we should understand that the price, the candles are going to their average significant, their average price digits, and that means that the trend is going down or ending, or it's like some kind of well, a little flat or down straight, whatever. So we should not make deals up as an any trend market during this moving price, moving candles to the moving average. We have the breakdown. Well, we have the breakthrough. This is not the signal. This is just a attention for us. It's a signal for attention, because in this point we could go down lower, like here, yeah, like this one, and now our moving average will move then some kind of like here, and for example then we could get the news candle, and then the moving average goes here. So, and the price is quite far, and this was not a pin, but this was a breakthrough, the real breakthrough, but not here. As I told you, we should make a deal when one candle is closed and another one begins, because we don't know where it will go. Maybe it will be the green one, and we will still move up. But if it's breakthrough, we can make a deal. We can enter the market. But anyway, when the price goes closer to the moving average, we never make a deal, because we don't know what is going on. What is the trend? Is there any trend or not? We are, new buyers and the most traders who don't want to take more risks or someone who has no enough experience in trading, in flat trading or in trading generally. So the main idea, trend is your friend, trade by the trend. If you don't have the trend, don't make deals, don't trade, wait. So here we had a rebound. We had a false breakthrough and rebound, and our price went up. And the moving average went up, but a little bit later. And we have the distance, not much here, much more here, quite much more here. So the distance grows up between the moving average and the candles. And what do we have? We have the possibility to trade for 2 or 3 minutes. We have a trend, and we may enter the deals. So the main idea of the classical signals is to trade when we have the breakthrough of the moving average. Like here, we have the breakthrough, the full breakthrough. It's not some kind of false signal. We really have a breakthrough, and here is the confirmation, and here the confirmation. So when the price breaks up or down the trend line, that is the attention signal for the reverse of the trend, or the end of the trend, or the beginning of the new one. The end of uptrend is the beginning of the downtrend. You should remember, always remember that. And moving average helps us to understand what is the average trend, what is the average level that is breaking through the price. Is it breaking the average up, like here, or is it breaking it down, like here? But you should not trade on the breakthrough. You should wait. It's attention signal. After that, you wait for the second one, because price, as you remember from the horizontal support and resistance lines, you should remember that price often, after the breakthrough, it goes back to the line, and only that reflects and goes down, rebounds here and goes down for the new trend, downtrend, for example, or up, like here. Anyway, don't trade here, don't make a deal here. If you have no much experience, or you're not a scalper, a good scalper, just wait. After that, make a deal somewhere like, even not here, something like here. Enter only after confirmation of the second or even third confirmation, like here. You can be sure that the price, the most probability it will go down, and the moving average will move like this. So when the price breaks through up, the breakthrough was like somewhere there, or rebounds with the moving average going the same trend as it was one, you may make deals up. When it breaks through and confirms the breakthrough, then it helps us to understand that the uptrend is finished, and they're in the beginning of the new downtrend. And you have some time, and you should understand the expiration time a little bit more, time lag, take a little bit more expiration time, and you're going down. The trend has, the uptrend has ended, and the new downtrend was born here, in this zone. Not in this point, but in this zone. Don't remember that. Don't forget that. Remember it and use it. So, what about rebound? The same history. If the price goes closer to the moving average and rebounds it, so we have the second or third wave of the trend. We may have it. You should watch what was happening before, and here with the rebound, you should understand that the new wave is coming. And on this second or third new wave, you may enter the deal, but not for long. Well, it depends on the time frame. Because the moving average is not a quite fast indicator. You should understand that when you have a breakthrough or you have a rebound, then the price will move in this direction for 2, 3, even 5 candles, not minutes, but candles. If this time frame is 1 minute, so the one candle is 1 minute, yeah, time frame. So 3 or 4 candles, 3, 4, 5, or even 10 minutes. If this is 5 minutes, 5 minutes candlestick chart. So 2, 3, or 5 candles are 5, 10, 2, 3, 10, 15, or 25 or 30 minutes. Expiration time is considered and depends on the time frame. Don't forget that too. And moving average helps us to understand where the trend begins, like here the downtrend begins, where it ends and goes, for example, in a quite deep, flat, and you don't trade flat, for example, or not, you are waiting flat for trading inside it, then the moving average is just an attention. It helps you understand where the trend ends, and the flat, your trading time begins. But in general, moving average is helping to understand where to enter the deals on the rebounds and where to enter the deals with the breakthrough and reversal of the trend. These are the main signals. When the price crosses the moving average, the first one, it's attention. The second, it's a deal. The third is one deal more in the direction here, for example, down. Or here. Here was the first one. Here is the rebound. With the rebound, yeah. Then you go up to the next deal. The one more, or the first one in the series in the row. If you have entered, for example, you have opened your laptop, for example, somewhere here. So you see that the uptrend, then it's correction time, and the rebound, the new wave of the trend. You may enter here in the up deal. So the two signals mainly, yeah, the crossing of the moving average is the signal, the first attention signal, the second crossing and the rebound from the other side as support and resistance horizontal lines levels. So it's it's the changing of the market, changing of the trend, and the new trend is born. For example, here like a downtrend. Crossing, it's attention. The second crossing and rebound or crossing down in the same direction as the new deal and the new trend. The same thing is here. If the rebound, if it's false breakdown, breakthrough. So wait a little bit, 1 or 2 candles, and enter if the trend is going up or down as it was before this rebound, before this false breakthrough. That's, I suppose, all for the basics of the moving average. I can show you so far the screen with the platform so far. I'll try to do it next time because I don't know what happened. I really don't know. It's a technical issue I haven't been able to solve for about 10 or 15 minutes. Even if I have checked it in the morning, everything was working fine. Well, sorry for that. I will show you the next time. I hope you understand a little bit about moving averages, about the calculation of moving average. How is it calculated? That is not the prophecy, some kind of prophecy indicator that allows you to watch through the timeline in the future. No, it works only with the prices, with the levels in the digits, what have happened with the prices in the past, as any technical analysis. It helps you to understand some well, general things, to confirm some deals by with your own trading strategy if you have one. It helps you to understand where the trend ends or where is ending, because the when the price is going closer to the moving average, the closer the distance, the less momentum has the trend, so it becomes the flat, or it will become in a non-distant future, the most probability. Or will like spring, it the price is pressing down to the moving average, and after that it will rebound with a new momentum, higher momentum of the trend, and that will be the possibility for you to earn money. That's all so far. I will check the chat. Any questions you have about 2-3 minutes until I'm reading the chat and answering the questions. If you have some questions, please write it down. I will answer them too. Okay, what do we have here? Profit. If any course have to complete for beginners to trade, I'm preparing the beginners course, the concept with several lessons, with several basics, psychology basics, technical bases like moving average, like support and resistance levels and lines. That will be like some kind of must-have passed for the new buyers, but it's still in progress yet. Okay. I have traded right, but candle wrong for me last time. Why this problem? I have my all money. Well, candlestick analysis, the quite well, Steve Nison's book. It's quite about 700 or 500 pages, so it's not so easy. Just try to check it, try to practice on the demo, and only then make several deals, rare deals, but profitable. It's better to get 2 or 3 deals a day and get it profitable than to get 100 and 50-50 profitable and minus. Please speak in Hindi. Sorry, I'm speaking only English and a little bit Spanish, but not Hindi. Okay, can you show real-time trading so we can understand? As I told you today, I haven't had any possibility to show you my screen. Anyway, there is the thing. Here is the thing. You can trade. It takes all your concentration. any trader. It takes all the concentration, it takes all the resources, all the attention. Or you can explain something, some theory or some practice showing, but both things are not able, because me or someone else doesn't have any kind of enough attention to pay it to, well, profitable right trading and to explanation some theory. So I'm doing only one thing. My job is so far to explain these things. For real trading, I suppose that in non-distant future, I suppose the next year, in the beginning of the next year, or even earlier, we will show some kind of the public account with our traders, inside the company traders, or some kind of the best traders of our clients of our traders on the platform of you, who will be the best, so they will have the possibility to trade on the real account, showing the right strategies to all of you. Maybe that's an idea. I don't know how will it be will it be brought to life soon on, or a little bit not soon, but it will happen. But anyway, I'm explaining something, or I'm trading, because this is not the positional trading. It's like a short time inside the intraday trading. And much more, it takes much more attention, much more concentration. So I won't be able to explain anything. What time is better for trading? The better time for trading is the volatility time, when you have price movement, any kind of quite wide, not a straight line, flat, just a wide flat, or even trend with some kind of a little bit going contra trend price movement. So when you have the movement, when you have volatility on the asset, you have the possibility to earn money. If there is no volatility, if there is no trading possibility, there is no possibilities to get money from the market. And it depends on the best time, I suppose, as far as I have from my experience, is the crossover this trading sessions on the currency pairs. It's European and American crossover, European and American session crossover, opening of the market, opening of the European market, crossover on the European and Asian market. But it's quite and the American trading time, American session trading time, they are quite aggressive. They make money aggressively and actively. So the American trading session is better than, for example, Asian one. For United States dollar, European, and all currencies European, the majors. I don't know what about Chinese currencies, Japanese yen. Well, a little bit better, maybe. More trends on the Asian and Pacific trading sessions, but the majors, Britain pound, euro, United States dollar, better trade with the American session. Okay. In the crypto index, what time period is good to trade and use the moving average? There is no difference between currency pairs and cryptocurrencies and crypto index. So except they are a little bit more well, there is a little bit more noise that it should be filtered for trading, and this noise is like can be cutted by moving average with a little bit more period. For example, if you use successfully on Euro USD period like moving average with the period like, for example, 20, then on cryptocurrencies and currency pairs, crypto index use a little bit more period. For example, 25 or 27, something like that. Well, time frame is about 1 minute, 5 minutes, whatever. Well, just take a look at the asset and make your decision about period. But it will be a little bit more than on the traditional currency pairs. When will you tell about the course? About the course, I suppose I will announce it in the end of November, in the beginning of December, I suppose. But that's not for sure. Well, in the social webs will be some kind of announcement. Maybe marathon, another one, marathon by the new year. I don't know yet. But the course, I suppose, will be ready for the beginning of December. Sorry. You are Bimnova staff. I suppose that the question. No, I'm consulting them. I'm working with Binomo like a partner. Well, close partner. I wouldn't tell I'm staff. It's like a consulting thing. They have asked to bring some more information about trading to their customers, to you, and I'm trying to do it with my best, as good as I can. Can you tell me what is the use of alligator? The use of alligator is alligator as is only one indicator is not quite a useful. Use alligator with fractals and use alligator with awesome oscillator. Use it with because alligator is one of the three indicators: awesome alligator, awesome oscillator, and fractals of the Bill Williams trading strategy, the trading chaos. So alligator alone is not quite a useful thing, or you should play with the adjustments with periods, with lags, time lags, and so on to adjust it for your trading. But adjust the 3 moving averages and nothing more. The reason I want to know which time period is best is because the moving average doesn't always work on other pairs. Moving average, as any other indicator, should be adjusted for your trading manner, for your trading vision of the chart. It should be a little bit adjusted for each trading session, for each even day sometimes, because I suppose you understand that the Monday trading differs a lot from, for example, from Friday trading day. I mean, so adjust it, play with it, test it on demo account because the quotes are the same. Watch it. And I always use the moving average like the confirmation signal as one of the confirmation signals for my trading system, in my trading system, for my trading trading strategy for this time, for this moment. It may be well, this time and today in this hour it may be flat trading strategy. Next hour it may be a trend trading strategy, but moving average will help me to filter the signals, and I use about 50, the most common 50 period, 50 candles. I use 100 sometimes. With the crossing moving average, I use 20 period, 21 and 8. 21 is lazy, 8 is fast moving average. Sometimes I correct the periods like 20 and 7 less. 25 and 5. Well, play with it on your asset you're trading most, and don't try to trade the same periods, the same moving averages on the all assets you want to trade, and concentrate on the one firstly. About Bollinger Bands, there will be another stream, there will be another well, another stream about that, because Bollinger is not less useful and less, it's a wide indicator, a lot of things as a moving average, useful things in this indicator. And today by the moving average, it's about I don't know, 5, 10, 20% of the information you should know about moving average, but the most part of information you should get by yourself from trading, from testing on the demo account, on the real account with the minimum trades deal amounts. So practice a little bit more, and it will give you that adjustments of your trading, of your moving averages, 2, 3, 1, whatever you use, that will help well to you in trading. So for today, thank you. I suppose that's all. Everything I wanted to tell you I have told. Any questions, please ask me and the social webs, or ask here. I will watch it and answer. And I suppose that's all for today. Thank you for being with me. See you next time. Bye.